Hi, welcome to another daily recap. So today I'm going to recap the 128 and it's November 1, 2024. A fresh month, fresh hopes. So let's see what happened on this day. So today actually I got one losing trade in EU and one uh, no trades in EGU. Actually it was the I lost more than I expected uh, because of the news. I'll tell you what happened on this day. So before that, I just show you the fundamentals. Today there was news at 12:30. So this is where I my stop loss got hit, and there was another news at 2 p.m. So let's jump into the whiteboard and see what happened on this day. So starting off with EU. So in EU, this is a daily chart. You can see the swing structure is bullish, internal is bearish. I'm just showing you the internal structure because that's what is the most important one. So price has mitigated the daily demand and it has chalked bullish. And this is the high probability POI from which the price can mitigate and then push up. So if not the POI, at least the price can fill this fair value gap. So price can come down to fill this fair value gap and then it can push up. So today I am expecting a bearish move to target this fair value gap. So this would be my daily target. If there is enough volatility in the market, then price can push further down and mitigate this daily demand because this is high probability demand. Why? It has swept liquidity and it has displacement. So that these two criteria make daily POIs high probability. This is the 4 hour chart and this is the zoomed out version. You can see the swing structure is bearish, the internal is bullish. Now zooming in to see the internal structure, that is the current price action. You can see the fractal structure is bullish, but I am expecting the price to come down to make an internal pullback. That's the first one. And the second one, there is a buildup of low resistance liquidity. And also price has mitigated the 4 hour supply. So combining these 3 points, then I can say that the price has a lot of chance to come down to satisfy all these conditions. So that's why my 4 hour bias during this day is bearish because of these 2 points. And one more point is that to make an internal pullback. So these are the points that I'm expecting the price to come down. Jumping into the H1, the swing structure is bullish and internal is bullish. But having said that the price has mitigated the 4 hour supply, that I can say that the price can come down and take out the strong internal low, making the swing pullback. This means that I'm literally playing the phase D shots. And one more thing is that price has mitigated the 4 hour supply and it has swept the buy side liquidity. That is, it failed to take out this high. So the that low that failed to take out this high is this one, which means this low is weak and this is my daily target. And also there is a fair value gap below. So everything is perfectly set for me to take shots, and also the price has chalk bearish, which means I am trading in line with the medium time frame order flow. Everything is set perfect. The stage is perfect for me to take shots. I can take shots in two conditions. First one is price to take out this buy side liquidity and then chop bearish. So that will create a fresh POI. If the price pulls back to this POI, then I can enter using my LC models and then tar- uh, target the daily target or a fixed 2.5 hour. But the second option is directly use the LC, directly use this as the lid and enter the shorts directly because price is already top bearish. So I'm trading in line with the order flow. Just use the LC candle and then take the trade. But the problem here is the POI is very big, so price can give me a fake reaction, tag me in, and then tag me out, and then show me the real push down. So there is a chance of a losing trade. But if the price takes out this liquidity and pushes down rapidly, then that the second method would validate. The first method is more conservative. I would not take a loss, but at the same time, I would miss a beautiful window. So you need to take trades as per your risk appetite. So this POI is not respected, but a new POI was formed with sweep of liquidity during the session. So I was interested in this POI because price can rally down quickly to take out low resistance liquidities. So this is PSD shorts. Price tapped into the high time frame POI. Yes, it did. High time frame supported the medium time frame idea. Yes, both daily and the 4 hour is bearish. And the HTF POI, the score of, sorry, this is this POI with a score of 4 by 8. Yes, because it has swept liquidity, it has displacement, fair value gaps, and it has made a shift in the order flow. It is unmitigated and it is formed during the film, that is the London session, and it has flipped an order block. This is a low time frame order block, but still it has flipped some kind of demand. So POI is perfect. And what are the other confluences? It has, sorry, I think I not consider this, but you can pick some of them on. It did not ship Asian liquidity. Yeah, no supply chain is not being respected. Yeah, there is no opposing demand zones, and there is time-based liquidity to target. That is the previous day's low and the New York low, as well as the London low. As structural liquidity to target, a strong internal low. This is not the highest probability, but there is structural liquidity to target. Low resistance liquidity, yes, there is low resistance liquidity. Has it swept the previous day's high? Yes, it has swept the previous day's high. So, swept the London high? No, but it swept the New York high. So, let me take this one. These two are cancelled. So, there are a ton of other confluences also supporting this bearish trade. So, entry method, there is no inducement. So, I need to wait for an LC2A or an EM15 confirmation entry. Fortunately, price mitigated this supply and then it made a fake move. So I can enter using the 61.8 and then push down. But what I was thinking is, let me be a bit conservative and try to mark. That's why I marked this as pullback indifferent and waited for the price to take out this PBID because price has not yet mitigated the M15 supply minded. So price can come up to mitigate this fair value gap. A lot of imbalance is there to mitigate this fair value gap, and then the, this means that the price had made a fake break inducement. Then I can take shorts using the liquidity candle and then aim for this sell side liquidity, and it played out perfectly. And yeah, this is the LC candle, but I prefer this candle because this is much larger and whether I can keep my stop loss just below this one and above. So I gave 2 pip stop loss, not 2 pip, 1 pip stop loss above and 1 pip displacement buffer below. At 12:24, I got tagged in, and at 12:34, when the news stuck, I was stopped out. So I'm actually trading with 5% years prop firm, so they have bit less slippage. So that's why instead of losing zero point 0.5, I just lost extra 1%, that is zero point 0.6 because of slippage. If you go to other, I don't know, I traded using the funded trader, which is before the wipeout. They used to charge a lot of slippage. 0.5 percentage becomes sometimes becomes zero point 0.8 or zero point 0.9, sometimes 1% also. That depends upon the news and the volatility. But today, uh, the loss is less. It is just 0.6 percentage. I must be thankful. So I thought the price will come down, and I thought I would get more than 2.5 percentage in like 3.5 because of slippage, but it happened the opposite. So it is what it is. The market is uncontrollable. What I can control here is my emotions when I take a loss and my mental, my brain, which forced me to change strategy when I took the loss. So only these two that I can control, and these two variables are perfectly under the control. And what is not in the control is the market, which we can never control unless and until we are a big, liquidity providers. So yeah, that's it from EU. So let's jump into GU and see what happened on this day. So again, keep in mind the two news at 12:30 and 4 p.m. So this is GU. The swing structure in the daily is bullish, the internal is bearish. So if I zoom in a bit, you can see the current price action in the daily. The price has mitigated the daily demand zone. So now we can expect the price to push up to mitigate the daily supply. So this is absolutely contradiction with EU. In EU, I was aiming for bearish mean, in EU, in the daily chart was giving me bearish signs, but here in GU, the daily chart is giving me bullish signals. So it is totally contradictory. So times like this, I've seen. Today is actually December 26th. So times like this, I've seen it is the chances of getting profitable trades comes down. But the thing here is, I'm treating EU and GU not as correlating pairs, but as separate individual pairs. So I'm not bothered. I'm trying to get rid of the signals that I'm getting from EU with that of GU because in my mind there is that fundamental concept that EU and GU moves parallelly. So that is correct for about 70 percentage, but the remaining 30 percentage they move in different directions. So probably this could be that different phase. So price mitigated the daily demand, thus I can expect some bullish reaction of the demand. I can play longs targeting some buy side liquidity within the daily supply. So this is the buy side liquidity which I can target, but there can be some lower time frame buy side liquidity which I can target. So jumping into the 4 hour chart, the swing sector is bearish. So before the daily supply, there is this H 4 hour breakup block. So price can mitigate this 4 hour breakup block, and with this low resistance liquidity below, I can expect some H1 chalk with a fresh POI. I can look for shorts targeting this low resistance liquidity. So there is no absolute right that the price must go all the way up to take out this price liquidity. Yes, this can be taken in the future, but not now, probably. That's why my 4R is bit neutral because it has a ton of bearish momentum and it has sell liquidity and it has a breakup block. But the opposite is if you think from the bullish perspective, price has mitigated the daily demand. So there can be a ton of bullish reaction coming from it. And also this is a news candle. So the since it has taken out strong sell side liquidity, so the strong buy side liquidity above this news candle. So if you think of from the bullish perspective, this is right, and if you think of from bearish perspective, you're also right. So there are two. You can take either longs or shorts based upon the session direction that you identified from the H1. So in the H1, the swing structure is bearish, internal is also bearish. So the shorts are phase A2 and the longs are phase D. Both are valid because the price has mitigated the daily supply, daily demand. So phase D is also valid. But for taking phase D, I must see the price chalk bullish. But currently there is no chalk bullish. But if the price, since the price has the sell side liquidity, if the price pushes up like this could be my new POI. Then I can look for longs, targeting the buy side liquidity above. So that was my game plan. But initially, the price, though it swept the buy sell side liquidity, it also swept the buy side liquidity, and this sweep is much stronger than this sweep. So obviously, what I can expect, price has mitigated the 4 hour breaker block, and it has swept the A's and I's. If the price chalks bearish, I mean, I chalk bearish, then the short should be high probability because a lot of buy side liquidity has been swept. So now the price can aim for the sell side liquidity, which is down here. So it's very simple. Very Yeah, this is what happened on this day. Or this is the session. Price of the buy sell liquidity, and it did not close below. Rather, it just kept going up. And when the price made another leg up here, so I marked this POI, and I expected the price to mitigate this one, but it did not mitigate this one, and price it rallied up, and it took out the buy sell liquidity above the next day. So yeah, it is what it is. I didn't get any trades on this day, and at the same time, I didn't lose any trades on this pair on this day. So yeah, that's it from today. So today I lost 0.6 percentage and extra 1%, extra 0.1 percentage loss because of the news and because of the slippage. Apart from that, it was a very good winner. It was a very good analysis. Everything was lined up perfectly for the trade. But it is what it is. The news is the fundamental concept which alters the supply and demand. So we can't control that fundamental. So anything. So that's it from my side today. So see you on the next day. Until then, cheers, guys. Bye. Thank you.
Free audio post production by alphonic.com.